So today we'll be going over the casino industry. I'm Michael Williams. We'll be doing part 1, Shelby will be doing part 2, and Amanda will be doing part 3. So types of gambling, there are on and off track betting on horse racing, on track betting on dog racing, state lotteries, online gaming, sports betting, which I participate in every fall, and of course casinos. Some interesting facts are that there are 1,600 casinos in North America. They bring in around $73 billion in revenue every year. And the biggest casino is in Macau, China, and it is owned by Las Vegas Sands, and it has 10.5 million square feet. Some definitions that you need to know throughout this presentation are base jackpot, slot machine, win, and chips. The base jackpot is a fixed minimum amount of a slot machine payout for a specific combination. The slot machine is a type of mechanical or electrical apparatus used in connection with gaming. The win is basically the difference between gaming wins and losses before deducting costs and expenses. They also use this for gross gaming revenue. And then lastly, chips, which are money substitutes, which are issued by gaming entities and used for wagering as well. So casinos, how they make money at the slots. Well, basically casinos make money by taking your money. Fewer gamblers equal fewer revenue for casinos. Many casinos have bars, restaurants, and hotels attached to them, which I will get back to later. With the slot machines, they typically only pay out 90% and keep 10% of the win. So they only pay out 90% of the jackpot, basically. Slot machines are close to winning, so like they're near misses. They release dopamine into the brain, and it makes the gambler think that they're doing really well, but in reality, it takes thousands or millions of spins to win the jackpot. For the tables, basically the casinos take your money in exchange for chips, and it makes the gambler think that you are losing chips instead of money. If there's a pot involved, the casino also takes 5 to 20% split of the pot. And then the casinos, they want to keep you there, which I will talk about later as well, but they provide with promotional alcohol, and they pay women to be there to show off. They also organize the tables and machines in order for it to be confusing to exit the casino. And a worker that I researched said that casinos exploit the negative characteristics of human nature to extract as much money from them, and this couldn't be, more true. Liability. So this is the first accounting issue that comes up. So when a customer exchanges cash for gaming chips, the casino has a liability as long as those chips are not redeemed or won by the house. So they have to keep that liability on until it is won or they exchange those chips. Every year they have to adjust that liability because people sometimes keep them as souvenirs or they're lost. And this slide just basically explains the liability of that. Revenue recognition. Casinos have to report revenue on an accrual basis. It is recognized by the win from the gaming activities, which is explained in the FASB codification right there at number 1. And then 2 and 3 explain that an entity shall accrue a liability and charge a jackpot to revenue at the time the entity has the obligation to pay the jackpot. And in the case of slot machine lessors, they record the win as revenue and the participating fee as an expense. So for promotional allowances, which is the third accounting issue that comes up, these are goods and services which would be accounted for as revenue if they were sold, and that they make people want to stay. They give out free rooms, food, or discounted rooms and food, beverages, entertainment, and parking. The retail amount of the promotional allowances shall not be included in gross revenues and should be charged to operating expenses instead. But however, they could show it on the income statement as long as they deduct it from gross revenue. So they could show it as gross revenue as long as they deduct it. income taxes for casinos. Financial statement reporting for casinos differs from income tax reporting, and it results in deferred income taxes because of the following conditions. And the first condition is recognition of casino receivables is used for financial statements when collected. And then the second one, costs are deferred for financial statements and are charged to expense for income tax reporting. And then the last one, progressive slot jackpots are accrued based on meter readings for financial statements and are charged against revenue when paid for income tax reporting. This whole thing states that casinos should keep a book as well as a tax book for their accounting policies and what they keep track of. So in the next slides will be part 2 of this presentation, brought to you by Shelby.